Right then, good morning, folks, on Wednesday, the 21st of June for today's pre-European rundown. A little bit of time to digest the UK's inflation figures out this morning, which is the talk of financial markets as we head into today's European session. A couple of things of note: we had some minutes out of Japan over the course of the evening or the evening of the morning. And Bank of Japan debated risk of being too late in raising rates at April meeting, which is interesting. They did debate raising interest rates, but they have not raised interest rates. So debating it and actually doing it are slightly different things. Japanese yen downside over the course of this morning, which markets obviously haven't reacted positively to that, and we'll have to see how that plays out going forward. Do we get any more comments out about that sort of thing going forward? But as of now, nothing really to see there just yet. But if they do hike interest rates, Bank of Japan, that should cause the Japanese yen to scream to the top side, which would be definitely a trade that we can look to try and get involved in. But for now, we need to wait on a little bit more information to see if that's something that they're actively looking to try and do. But talking of town this morning, UK's inflation continues to be an issue. The Bank of England are in a tricky spot as we head into tomorrow's rate decision. We'll come across to the calendar now in a minute, but if we have a quick look across, the headline, and in terms of other things, we can see we have one Falters dollar firm ahead of Powell testimony, Australia and Kiwi dollars waiting in the wings for Powell after steep falls. So everything is sort of waiting on Jerome Powell today. Asian currencies fall, stocks mixed ahead of Fed chair's testimony. So rest of financial markets all waiting on Jerome Powell. As you can see over on the grid over here, sterling is higher across the board, right? That is in the lead up to the Bank of England later on. Later on today is tomorrow, but we need to wait for the Bank of England tomorrow. We'll speak about that a little bit in a minute. But you can see Australian dollars, Kiwi dollars, Canadian dollars, euros, Swiss franc, all pretty mixed. Japanese yen downside, albeit not by a massive amount, but the Japanese yen continues to the downside. Sterling strong across the board. The dollar pretty mixed, but you come across the stock indexes, equity futures are flat, but they're not exactly flat by too much. You can see minus 0.1%, less than minus 0.1, minus 0.1.4, minus 0.11. European equities largely flat. Asia Pacific equities, the Hang Seng Chinese stock index, a couple of them are lower, but apart from that, pretty flat. No major moves across this evening. Bonds are slightly lower, yields slightly higher, potentially off the back of some potential for some hawkish remarks from Jerome Powell over the course of today, right, and tomorrow. Obviously, speaking twice, semi-annual outlook on monetary policy. So definitely something we need to keep an eye on as we head into today and tomorrow's trading sessions, and that is what markets are considering or taking into consideration as we head into tomorrow. But we can see inflation today. The headline CPI print remains flat from the previous month, up 0.3% in terms of the consensus, but I think this core CPI print is definitely the one we need to keep an eye on. You can see consensus in line with previous 6.8, consensus 6.8, but actual 7.1%, and that is an insane inflation print from the UK this morning. And you can see the total rate of inflation month over month figure, previous 1.2, consensus 0.5, actual rate 0.7% in terms of the total rate of inflation over the course of the month of May. If we just take this down to the low impact and come back to Wednesday, you can see the core CPI print 0.8%. I'm not sure why that's tier 3 data. I'm not sure why it's low impact data, but it is. And you can see core CPI 0.8, consensus 0.6. PPI slightly lower than consensus, which I suppose is one slight positive when it comes to the UK, but in terms of consumer prices, it's a pretty insane inflation print out of the UK today. And what that means then going forward is a little bit tricky. You've seen some sterling upside off the back of that, not a massive amount of movement anywhere else. Dollar yen grinding higher, Aussie slightly lower, Kiwi slightly lower, but apart from that, you're not got any real movement across any of the major currency pairs except for sterling, which has popped higher and now it is cruising back lower. You can see the FTSE through the lows, as you can see here. No real movement across any of the other stock indexes to start the day, but that FTSE is through the lows and looks primed for further downside. You would have to imagine. We'll come across here. Have a look at some bond yields. We have a look at this trend line break, and we have seen since failed at these lows back here and decided to push back higher up into that trend line. So a bit of a failed break there, and that just range continues. If you were to remove that trend line, it's just chopping sideways, and there's not much really to see there. So we'll keep an eye on that going forward, but I reckon that price action off the back of that probably rests on Jerome Powell. You can see the support level on gold that we are testing at the moment failed to break it yesterday afternoon or yesterday evening. And again, that seems to be waiting for Jerome Powell. But if we have a quick look at this and just look at UK bond yields, we go GB10Y, yeah, UK bond yields on, you can see the yield on gilts moving lower over the course of yesterday and then into today. Not too much price movement as of yet today. EBP 02Y. We got the 2-year up, and again, not much movement across that. So we do need to wait for these to kick into gear. Do we get some movement off the back of these once markets fully wake up at 8 o'clock? Obviously, we'll have to see how that plays out. But in terms of what this means for sterling and what this means for the FTSE, sterling in the short term, it means the central bank have to continue raising interest rates. There now, I think, is potential personally for a 50 basis point hike tomorrow, a surprise 50 basis point hike tomorrow, which markets had originally priced in a 25 basis point hike. So I do think there's definitely potential for that, which is positive for sterling in the short term. It should cause sterling to push higher in the short term, and should definitely cause the FTSE to push lower in the short term. But what that means medium term, I mean, FTSE lower medium term, short term and medium term, I think is an easier trade. What that means for sterling is a little bit more tricky. Expectations for interest rates to rise further faster is positive for sterling, right? Hawkish central bank raising interest rates is positive for the currency. That's a simplified way of looking at it. But it's not all, markets are not simple, right? You got to think about what that means medium term. The further the UK have to raise interest rates, the more negative it's going to be for the economy. I think the Bank of England are in a difficult position now. They have been in a difficult position for a while, but if those CPI prints continue to print prints like that and continue to beat expectations like that, in terms of going forward, they're going to have to hike the economy into recession to get inflation down, and that is a situation that is bad for sterling, right? Any recession in any country is negative for the currency, negative for the stock index, and I think that's where we have to be headed on in terms of the UK is hiking interest rates to a point where the economy has no other hope other than to slow down. So yeah, sterling's popped higher on that, but is sterling a decent sell off the back of interest rates going too high? I think possibly, maybe not in the short term as they hike interest rates, but certainly if they get up towards 6%, which some market participants are predicting, surely that's not positive for sterling. I mean, you gotta get your kind of thinking hat on, and surely that's not positive for sterling. You can see already reflected in the price, the pullback from the spike higher. And you'd have to imagine, or certainly I would have to imagine, that the further interest rates go, the more negative it becomes for UK assets. But short term, we don't need to worry about that too much. You can get long sterling off the back of that. But in terms of medium term, but markets try and front run things. They try and predict things ahead of time. And for me, I can't see any way in which this is positive for UK assets if this continues. And yeah, the further interest rates go, the more chance of a recession, and the worse it's going to be for the economy going forward. Bank of England have now predicted no recession. They've been pretty wrong on interest rates and inflation, so I wouldn't back against them to be wrong again off the back of this. So yeah, we'll have to see how that plays out. But for me, looking at that going forward, surely that is not positive for UK assets. Medium term, they seem like decent sells for me.